Good afternoon. Welcome to OptionsTenders Wednesday, July 23rd, 2025. Now, looks like we got that last little top here. So we're going to definitely spend a little bit of time on that 65-minute chart. We do have a full count, Elliott Wave count here that potentially is the end of either the entire bull market or, again, a wave 3 into 4 into 5, or I also like to call it ABC because I have an expanded ending diagonal as the mega bullish scenario and this scenario, and we'll go through that on SPY as well. So make sure you stick around. This is going to be a little bit more detailed than the rest because I think we have some good confirmation of a top here in our danger zone, at least with a structure speak to this. So, all right. So it may be that we also have a lower high in QQQ. I'm not going to go through that, but just keep that in mind. And we also ended up with a new low with VIX. So one of those things was happening. Did we get a new low in the VIX with the new high in SPX and a lower low in NDX? That all those things happen different times in different ways. So that's what we're kind of keeping our eye on. We're doing this intraday about noon Eastern Standard Time. So if you want to get these videos intraday, consider becoming a YouTube supporter. It's 99 cents a month. It comes with the Discord and our trade alerts. And then the upper level is $4.99 a month. And we go through the trades, most of our official trades in detail of why we chose those trades. And we'll follow through with them so we can learn off of how at least I trade, or you can compare it to the way you trade as well. I'm a swing trader. And I look for my swings to be around a week to a month in time. Okay, so let's jump into it. We have SPX on the daily time frame. Here's our naked chart. Here we have a wedge, a bearish rising wedge broke down, and this could have been, that was a potential top here. What we were looking for was an ABC at that point, and then price held on to moving averages, formed a 5-wave leading diagonal, and that, excuse me, I said a top here. We potentially could have had a top here with a 5-wave move, but instead this was a wave 1 instead of a wave 5 in this entire move. Okay, so we held on to moving averages, strength, and consolidation. We held on to that support, and this became an extension into wave 1, 2, 3, 4, and instead of this top being done right here at the 1929 trend line, it held on and became a 1 instead of a, it could have been the stop here as well. It doesn't really matter how you count it. That's up to you. 1 instead of a 5 again, leading into a 2, 3, 4, and 5. Okay, so this is complete, or I mean, obviously, if there's a little wave 4 and 5 here on the really lower levels, we'll go through that. Okay. So let's look at some of these indicators. We have the moving averages. Again, we're in a bullish posture. We're holding on to that 8 EMA. The trend is still up. Nothing to change there. Cullen oscillator. This this really has to do some work for us to, I guess, break out. I've seen wedges break out before to the upside. Apple loves to do that. But this is broken out, and we're looking for a turn. All right, but still, you can look for a breakout, okay? And so what we're looking at is market breadth here. So the breadth is not good. We're about at this neutral point. It just means that the large tech stocks are what's holding us up. We don't have too many sectors that are very strong at this point. This, when it rolls over, we're going to get into very bearish territory, and it may look something like this here. When you have your distribution, you have the price action going up, but the breadth is going down, and we had our peak right there. Very similar to, is this our peak right here? All right, with negative divergence, and as soon as the market rolled over into bear territory again, boom, that's when you had your sell-off. Here's the MACD, RSI, slow stoke. Again, we're just oscillating sideways. We have the red histogram. We're basically neutral right here, but we're waiting for this to roll over with more negative divergence. I'm just going to say it right now. We have negative divergence on everything, so I won't, burn your ears off with negative divergence. So we're looking for this to roll over. We didn't get the full rollover. We were at 77 yesterday, but we closed at 80. So we're looking for that to come back down under 80, okay, for the sell signal on the slow stoke on the daily time frame. Okay, here's a DMARC. Counting up to 5. Do we get to 9? It looks, we're getting closer. I didn't think we'd get this far. All right, let's see what happens. So no sell signal at this point from that no setup there. Awesome oscillator. Oh, getting a green bar. All right, that's still, we don't want to see this get a new high here if you're bearish, but we have, again, negative divergence. Let's go to SPY. And we do these, we're following these indicators each and every day. I did not do this in the past. I kind of just gave you things to look at extreme points, and then we would focus on them. Now I'm doing this each and every day so we can learn exactly what we're looking for and how to interpret it, okay? All of these indicators, and you don't have to use all of these indicators. You can choose the one that's favorite for you and maybe your combination. So here's SPY, so we can look at the money flow index. This, if you're brand new here, it catches turns every time. It doesn't, there's sometimes when you don't have divergence, but it catches them every single time. This is a fantastic accumulation distribution indicator. And right now we're just getting tight price action with negative divergence. As soon as this breaks here, I think we'll have our sell off there. But again, distribution into higher prices. That's classic Wyckoff. Bollinger Band. Oh, not quite there yet. We were talking about getting a little bit higher. And if you touch that upper edge with overbought, with negative divergence, that's a setup there. Not quite there, even though we did add on to our SPY puts today. Elliott Oscillator, same thing. I don't expect to see a new high off of this peak here. I just expect this peak to be a lower high, and that be a wave 3 into 5. Now you have a lot of wave 3s in here, right? Into wave 5. So this is a wave 3 into wave 5 right there. Again, this was an extension, so you had another lower high, wave 3, right here, into a wave 5. And now this is a different degrees of a wave 5 here. Lower degree wave 5, higher degree, excuse me, that was a wave 5, but higher degree wave 3. I'm just going to confuse people now. But if you do know what I'm talking about with Elliott waves, that's what the oscillator is telling you. A 3 into 5. You do get the extension, but you have another wave 3 where you get a peak and a lower high into a wave 5. Okay? Let's check out VIX. Now, I wasn't looking for a new low in VIX, even though this is still a fantastic traditional setup. This is a bullish falling wedge. And we connected all the bodies here with those wicks. So those were fake breaks, and they work out perfect. So you can do a benefit of the doubt and make this into a channel. And you can have the wicks and things like that. But this is beautiful right here, right now. We're getting towards the end of the lower end of the wedge, and so maybe that happens today or tomorrow. But we're into that minor cycle here, and because we were in the dominant cycle low here, I thought that would have been the low, but clearly, just like this low here, we ended up making another low in the minor cycle because we're still in the same pattern. Now, we're actually in this, even though it looks like we're far away from this minor low. It happens on a Monday, and so we have Friday, Thursday, and Wednesday, which is today. We're in that window already for a low. So that could have, it could be today, it could be all the way until Monday when you have the ideal low coming up there. And then you still have a rising phase. As a matter of fact, you'll have the minor rising phase and the rest of the dominant phase in action. And so that could happen really, really quick. All right. Big bars, for example, here, it could just start to take off relentlessly. Okay, let's go to the 65. No, let's stay on that daily because we want to show. So here's the expanding ending diagonal, which was a bullish pattern if we made a new high, which we did. And then you could have an extension. We keep talking about extensions. That's what you have to be careful for. I think this move is done or almost done. We do have some targets higher if price needs to be, but here's an expanding move, expanding ending diagonal, also a wedge. So you have an ABC for 1, ABC for 2. Notice that wave 3 gets larger, ABC for 3, ABC for 4. Now, oftentimes the 5th wave, it doesn't have to, is the longest wave. And so if this occurs where we get a retracement into our A, instead of it being done here at wave 5, this could be an A. We get our correction. All right. And you could say 1, 2, whatever the case is. We're, let me get these aside here just so we don't get confused. It could be a 1 or 2 if you're counting it somebody else. But with this formation, it's an A, B, and then we have a C wave going much, much higher. It could be equal to the A wave. Okay, so that would be our super bullish pattern if we were to go way higher. But it's likely we're going to get a correction before that. Things are getting super extended. Our indicators are showing a bunch of things here. And so it doesn't have to be a deep retracement. I have to adjust this because price continued higher. And so it could be any one of these retracements, but here's the 23.6 and a 382. That would be a bullish retracement if price is to make a new high from here. That's not a very deep retracement. And so this would be a B wave and we go C much higher. All right, that would be the bullish scenario. I think we're clearly going to play this into the correction, and this could be the top right here for the wave 5. I know there's other ways to count this. There's other ways to do it. I've seen them, but that's what we're looking for. All right, so the correction would be into the 600 area and the 575 area there, and that's where the gap comes in here. So if we hold that gap, there's a good chance that this was a 3-wave correction, if you see a 3 waves here, and we ended up getting a 4th and a 5th wave. That could be simply wave 1. Then we get a deep retracement into a wave 2, and then we get wave 3 lower. So there's your bear scenario. 4, 5. And it doesn't have to look, these are just placeholders. Okay, let's go to the 65. Here's a traditional look here. So we're forming these wedges. We have this bearish rising wedge, broke down, bearish rising wedge, broke down, rising wedge, broke down, and here is our last little wedge. So going up really close here. We have some room if price wants to go there. We're already forming our divergences and such that we were talking about yesterday, but we do have some room to go. If we want to touch the top of the wedge, it doesn't really have to, but it can. And here's our trade that we're looking out for this Friday. It's going against us. We'll see if this breaks down soon. If not, then that's a trade that did not work out for us. So here we go with the indicators. Here's our moving averages. So we're back above. We're back above the moving averages, above that 820. And there's a 50, there's a 100, and there's a 200. So still in a bullish posture here. But being in that danger zone that I keep bringing up, what do our indicators show us? A near-term bearish divergence. That's what we look for at the end of a move. So at minimum, after a move like this, you look for a larger correction. All right, not just a little correction like this, a substantial correction. Here's our negative divergence here. Let's see when and if, because yesterday this slow stock was down here. We knew that the price action was bound to head up a little bit higher, and we made it to the top of the slow stock. So it cycled all the way through. Let's see if that cycles downward, or when it starts cycling downwards, we should start to break down. That could happen maybe by tomorrow, I suppose. Not a lot of time left in this apex here of the wedge. DMARC. All right, maybe we're looking for a 9.9. So we got the 13.9 here and got our correction. And we could get a 9 count sell signal to end this move up here. Maybe we have 3 more hour bars, 65-minute bars up here. Awesome oscillator. Again, in the near term, it's exactly what we're looking for. Because when you have a correction significant enough where this gap is filled, we had just a new near-term high, and we have no divergence. It didn't have to get a divergence, but here's what happened. Now we have another negative divergence. It shows me that this move is just about done. Money flow index. Once again, it said this could have been done here with the overbought scenario. Now we made a new high off of that with negative divergence here. That's distribution and price action. And this is a really good, like I said, in the daily time frame indicator, that it's like the RSI. So it shows strength of a move, but it has volume in there as well. So it actually shows actual buying of the product. Bollinger Band, we're back there with the sell signal here in overbought territory with negative divergence in the Bollinger Band top band there. Same thing, Elliott oscillator, that's what we're looking for in the very near term. There's your, I know I say 3 into 5, but it also could be in a correction. It could be an A into C as well. But here's this is our count here. Here's our 1, 2, 3, 4, 5, and this is an ending diagonal where this is a 3-wave move for 1, 3 for 2, 3 for 3, 3 for 4, and you can see the little 3 there, 4, 5. So is that done? You could have a little price action here as well. And that brings us into our Elliott Wave count. This looks, again, it looks complete at this point to where this was our last move. If you want to see the full wave count, that's what we're looking at. 1, 2, 3, 4. And again, this could have been 5. And so that's why the Elliott Wave oscillator shows you a negative divergence there. But got the extension into 1, 2, 3, 4, and again, could have been 5 right here. We could have counted that as a 1, 2, 3, 4, 5. It could have been done, but this is an A, B, C at this point. So that's it. Now a 1 instead of a 5. That's where you get your Elliott oscillator, getting the divergence from this top to this top. Had the correction. So now this is a 1, 2, 3, 4, and 5. All right, and that's your ending diagonal. And that's pretty clear there. And now we're going to adjust these, and this is what we're going to start to pay attention to at this point when we do get our reversal. To adjust these. And we're going to start looking for the A correction. And again, we have to adjust our retracements into probably the A correction, probably into the 23.6, maybe get some sort of corrective B wave, and then a C wave down in the 382. This would be your bullish situation, and then you go to new highs. And for the top being in, that's what we just looked at. And so you'd probably get that wave 1 into that 23.6 retracement anyway. So it's going to be confusing because that's going to be an A, B, or a 1, 2. The key here would be every move starts off with a zigzag. I love one guy that I watch. He uses that because everything has to have that 3 waves into it anyway. Whether we get the 4th or 5th is to be determined. And so this is going to look the same, but that wave 3 is probably going to be the teller of whether we have a impulse wave or not, because the wave 3 will continue to go. If this is how it shapes up, sometimes you get a 1, 2, 1, 2, 1, 2, and then you get your wave 3 big move, 4, 5, 4, 5, 4, 5. If it's just a nice clean 5 wave move down, it'll probably have a 1, 2, and then a big 3, 4, and 5. Then test the lows of this move here. And by test the lows, it could be anywhere. It could be 5, 10. It could be lower. It could peak below it and then get a big corrective move. All right, so those are our 2 scenarios that we're looking at. Price action here. No longer need that. So that's what we're looking at, you guys. All right. Hope this information helped. If you liked it, subscribe, like the video, and check us out in the Discord. Lots of good traders in there putting out good charts, and there's a lot more trades out there that their trade ideas, looking into. We had some people looking into gold, to Uber, lots of names that are put out in the Discord. Not just the ones that I go through typically each and every day. We have a trade on Apple. I took off a SPY call trade. I didn't make it I did not make it an objective, or excuse me, an official trade, but I had a nice double on that one. Today, because of whatever pop that happened, it seemed like news, UK tariffs or something. I do believe we're going to make a lower high with the SQQQ, or at least SMH. They look very weak at this point. And that's, I think that's all we have going on. We have lots of puts. We have lots of swings with Saxes, QQQ, SPY. Yeah, I'm putting it out there. I put my neck out there. Yeah, and I know people are just dying to make fun if your move goes against you. But we're here to learn, trade. I do this full time, and I look forward to this reversal here coming up and then riding that trend. All right. Thanks, you guys.